Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Okay, before we get going to all the action on the street, let's straight away take a look at the new listing, the new kid on the block. It's been a tepid start, but there has been recovery from the lows. When CreditAccess listed in the morning, the stock was down 6-7%. From there, it's seen some sort of a recovery. Well, we have Udaya Kumar Hebbar, MD and CEO of CreditAccess Grameen, joining in to talk about the business and tell us what their shareholders can expect. Now, Mr. Hebbar, majority of your market is concentrated in Maharashtra and Karnataka. And that is seen as one of the key risks when one is looking at your business model. What is the geographical mix that you are targeting? Will you look at diversifying beyond these states as well?
See, if you look at today, we are already in 8 states, which we have started expanding in the last 4 years. We have moved into multiple states. Karnataka and Maharashtra have been our key geographies, which we started our business in Karnataka. As our business model, we keep on adding the districts, penetrate deep in the district, and then move on to next district. In the process, Karnataka and Maharashtra, we have a high penetration. And as we move to more states, which will automatically, other states will grow faster, whereas Karnataka growth or Maharashtra growth is less than 25-30% today, whereas our other states are growing more than 60 to 100% speed. So which will automatically take us in the next few years, the Karnataka comes down to lower. To give an example, Karnataka used to be 80-85% in the last before 3 years, which has come down to 55% today, and similarly Maharashtra also we are at about almost 20-30% now, which was actually less than 10% 3 years back. So basically this is an expansion process. As we grow in more and more districts, more and more states, and where we are growing very fast, which automatically reduces the share of these 2 states. We do not see a concentration issue because we operate in rural, we operate in an environment where customers are very loyal to us. You see from the customer retention point of view, we are the one of the highest customer retention in the industry. So which normally have a very strong support, and we do not see any risk in this business here.
Well, Mr. Hebbar, how does this IPO take your, what does it take your capital to? Till when are you capitalized for growth?
Yes, this business is always a capital intensive business. The balance sheet has to be strong enough every time when you borrow, because this is a borrowing and lending business. That is why we raise this capital, considering our growth pattern of 50-55% for last 5 years, and which we aspire to continue. So this capital what we raised will lead to our capital adequacy to almost 37%, which is sufficient for next 18 to 24 months, which will it will come down to about 20%. So we always want to maintain a 50-55% CAGR in the last 5 years in terms of portfolio, and about 41 to 42% in terms of our customer growth in the last 5 years. And this has happened with a very calibrated contiguous expansion, very calibrated growth of the branch and employees, about 30% in our infrastructure growth, which always given us this much of growth, which we believe and we aspire to keep that trend continuous.
Well, sir, 80 to 85% of your loans are to the same customers. Now, does that pose some kind of a risk? Are you planning to reduce this kind of a risk? If yes, then how?
Now, if you see in microfinance, customer retention is a key, and which will actually reduce your operating cost, and it increases your customer loyalty, which results into asset portfolio quality. We do not see a risk in retention of customer, which will actually strengthen the customer, strengthen the company with customer coming back to us again. Because for them we are the preferred lender, so the chances of they defaulting to a preferred lender is very low, and customers who are loyal to us will have a very strong asset quality for us. That is why the differentiation, if you see the quality of our assets and our operating cost low, is one of the key reasons with the customer retention, which we believe is a very strong point of CreditAccess Grameen.
Okay, Mr. Hebbar, one more thing that analysts point out is that the way the business is structured right now, your key product is basically the loans that you're giving through this joint liability mechanism. I think 80-85% of the lending happens that way. But competition is trying new products as well. So how would you respond? Are there any new products that you're looking at, that you might be looking at, that perhaps could be bundled with these loans?
We look at a customer point of view, always look at their need continuously. Within the joint liability, we diversify to support them in terms of the children education, the sanitation, the home improvement, the water connection, or emergency loans. So all this we provided within the joint liability mechanism, so that we will be the key important financial providers for these customers, particularly in rural, which helped us for all this retention, the low cost operation, and the superior financial matrices. While doing so, we keep looking at their future requirements. We keep studying and surveying their requirements. We talk to them regularly. We found that the customers who are already moved to 3, 4, 5 years in their cycle would move ahead with the requirement of SME or MSME kind of business, which we already started piloting last year. Already more than about 1% of our portfolio already in this segment of retail finance, where the customer who moving from a micro to a MSME, we provide the loans so that they can enhance their business, they can become an entrepreneur over a period of time. So we follow the customer's requirement continuously and devise the products for their requirement, so that we can continue to stay with them.
Okay, all right. Thanks so much, sir, for joining in and, in fact, giving us all those details. All the best, and welcome to the secondary markets. Well, keep an eye out on a few stocks really from the broader markets. Bombay Burma, that's a stock that's caught my attention. Suddenly in the last few minutes, it was as is holding with a gain of around 3-4%. Now it's moved higher. It's sitting with a gain of nearly around 7-8%. So keep an eye out on that one. Suntech Realty, I think a month-to-day chart should be pulled up of Suntech Realty. Now that stock is moving towards 500 rupees odd. So keep an eye out on that one. Today it's up close to 2%. Big volumes out there. But in the month itself, it's up nearly around 20%. Remember, it's been a multi-bag over the last few years, but the stock continues to move higher. Slip in a short pick, you come back, we'll get chatting with the management of Global Spirits. Stay with us.
Welcome back. So things are fairly steady as far as the market goes. Nifty hasn't moved much. We're pretty much par for the course. Good time perhaps to get some more market opinion then. Earlier in the day, we caught up with Vineet Sambre, one of the key fund managers in the industry. Is well known for the way he manages his mid-cap and small-cap funds. Now he's, of course, heading equities at DSP Investment Managers. Vineet says that the current market rally has been triggered by good numbers for the first quarter. He says that perhaps good quality mid-cap and small-cap companies will continue to outperform, and these stocks will do well over the next 2 to 3 years.
I think it is to do with the excitement which is got created because of the good performance coming out of the first quarter numbers. Please remember, first quarter numbers are also aided by the low base last year, and hence the continuity of these numbers is very critical going forward. My sense is that in terms of valuation, although we have corrected some bit, we've not come down to extremely attractive level. Given the macro headwinds, given the election next year, I don't rule out a possibility of volatility being high and some more corrections likely, which probably is also an opportunity for the long-term investors like us to keep building fundamentally strong companies. My sense is that while we look at these businesses in the small and mid-cap space, we get very excited. The corporate space, we get very excited. The corporates are looking more and more confident with the changes which have happened in the economy. We have seen the first quarter numbers, and our interaction with the management also suggests that such trend should continue. So, from that perspective, we get a lot of confidence in investing into such companies and, staying put, and also of a belief that if we remain invested in these companies for the next 3 to 4 years, the investment outcome would be really good.
Okay, all right. Let's move on then. From the broader markets, I was looking at it. United Spirits has suddenly moved to the high point of the day, so it seems like it's time for a drink. Let's pull up the intraday chart of United Spirits. That stock has moved to the high point of the day as we speak. But it's not just United Spirits, even GLOBUS Spirits, that stock, in fact, is on a roll. The stock has hit a 52-week high in January. It's also up close to around 120% in the last 1 year. and it's up 6% in this week. And as we speak, it's gone up again. To understand the business, what's the outlook going ahead, we have Mr. Shekhar Swaroop, the joint MD of the company, who joins us. Hi, Shekhar. Thanks so much for joining in. Give us a sense of, how's demand looking? What were the number of cases you all sold in the first quarter? And what's the target for the year on the whole?
Right, thank you. So at Globus Spirits, we have three themes that are sort of playing out. One is increase in capacity utilizations at all of our distilleries, which are in Rajasthan, Haryana, West Bengal, and in Bihar. The Bihar distillery has been closed for over a year, and it is going to restart very soon. In the other three distilleries, capacity utilization is up, and conversion from bulk to bottled liquor, to our own branded liquor, has been increasing as well. The next theme that's playing out in the company is a huge demand for ethanol by the oil marketing companies who want to blend ethanol into petrol. The oil companies have announced very good prices of ethanol, and for the first time permitted purchase of grain-based ethanol as well at the price of 47 rupees 13 paisa. And this will dry up a lot of capacity in the market. And finally, the theme that we are working on is premiumization, to bring in brands of high-end premium IMFL to the Indian market. Segments that are growing at 25% plus per year.
Absolutely. Shekhar, let's get a couple of details out from you, and if we can focus on some numbers. You're talking about premiumization. Currently, as a percentage of sales, how much is that? Where do you look to take it to? And I'd asked you about number of cases as well. If you could give us a sense of at least how much you sold in FY18 and how much you're looking to sell in FY19. Go ahead, Shekhar.
So premium IMFL business is a startup business for us. We are investing between 25 and 35 crores per year into this business. We started this in December of last year. So as a percentage of sales, it's very, very small right now, but it's a high growth business for us. For our other brands business, the economy brands business or the IMIL business, we have a run rate of about 1 million plus cases per month, which has been growing at about 8 to 10% every year. So those are the kind of volumes we have. Rajasthan is our biggest state, followed by Haryana and then West Bengal.
Shekhar, I've got a couple of questions for you. You made a very important statement that the Bihar distillery is going to resume operations after a year-long lull. That should mean immediate volumes for you. So how quickly will it scale up? What should we expect in terms of volumes for that segment, the segment that the Bihar distillery caters to?
So the Bihar distillery startup is really on the back of this ethanol policy. We foresee that starting 1st December, when the lifting from the tender begins, a large part of the capacity will go to the OMCs. We are hopeful to start the Bihar facility in the next 1 or 2 months. So say from September till December, we would probably run it at about 75% capacity utilization, and thereafter 100% capacity utilization. This will add about 100 crores of revenue to our business.
Okay, wow, 100 crores will get added. This is, and what kind of margins do you get on this government tender on ethanol? Also on margins, you ended last year at around 7%, but the first quarter of FY19 was a blowout quarter for you. Margins hit double digits. So I'm just trying to understand if that is something that can be extrapolated for the rest of the year. Was it an aberration? As ethanol scales up, and you have this JV with Mr. Vijay Reiki, the Unibev JV, and that's premium whiskeys that you're trying to sort of get into. As that scales up, how will this business look like in terms of the margin profile?
So the change in margins that have happened in Q1 has been on the back of price increases that we have been able to take for IMIL. So it is something which is very much extrapolatable. The margin increase due to ethanol, that part has not yet played out. I believe 12% margin is very much a safe side for this year. And as ethanol plays out, it will be, these margins will start going up further. Just on ethanol, our gross margins will be north of 20%.
Okay, all right, Shekhar, just coming back to you, Surbhi, I think it's time for a drink. You know, we're getting such positive commentary coming in from Shekhar. He's talking about big numbers. And if you pull up a few stocks as well, you know, you pull up a United Spirits, we were talking about, that stock is moving higher.
I think early weekend setting in? Is that what's happening?
Breweries as well. I don't know, it's a midday drink seems like it's taking place. You know, some of these, they're just going cheers all the way. United Spirits, United Breweries as well. And of course, we have GLOBUS Spirits that we're speaking to. That stock as well is up and about. But Shekhar, before we let you go, a few questions. You were telling us about Rajasthan being a rather large market for you. What percentage of your sales come in from there? You got an election up there, so I don't know about some commentary that could come in that, you know, in terms of whether you can drink, whether you can't drink in Rajasthan. So you'll have to keep an eye out on that one. But short point, what's your what percentage of your sales comes in from there? And if you're so positive on your business, I'm just looking at the shareholding pattern. The promoter holding has been coming down. Clarify on that.
So as far as Rajasthan goes, it's well over 30% of our revenue, and in terms of profit, it's a little bit higher than that. It is our most profitable state. As far as the election is concerned, we don't see any much sort of change in business to take place regardless of the outcome of the elections. It's been a very stable state over the last 20 years. And in the last 20 years, both major parties have been in power. So regardless of the outcome, we don't see any major change. As far as promoter holding is concerned, it's been more or less stable at around 55%, if I'm not mistaken. And there is no need that promoters have to dilute this shareholding at the moment.
54.21 as per the latest reported numbers on the exchanges. Just a quick question. Finally,
Sure.
Since the outlook is so robust, on the top line, what should we expect? You're saying 100 crores. You did about 970 crores in the previous fiscal. This year, straight away, 100 crores is coming in from the ethanol operations that get underway in Bihar. You add the rest of the business, top line growth, what should we expect this year?
Let me caveat that the 100 crore Bihar is on a 12-month operation on ethanol, on full capacity utilization.
So for this year, it's
we'll
half
probably get 1 quarter of that in this year.
Okay.
1 to 2 quarters of that we will get this year. But top line, besides Bihar, top line will be more or less the way it has grown in Q1. It's the bottom line, the profitability and the growth in cash that is taking place, and along with growth in cash, there is sizable debt pay down that the company is undertaking in this year and the next 2 years as well.
What's your, since we're very short on time, but since you mentioned it, what's the current debt to equity? How much money are you looking at repaying? And also just very quickly, capacity utilization. I think you're 80-90% on most of the distilleries. Are you looking to expand at all right now?
As of now, there is very little capex planned in the company. There will be some capex in Bihar and Haryana to become ethanol compliant, but that's very nominal. We have about 250 crores of outstanding debt, and over the next 3 years, we will see a large share of that getting paid down. We have very, as far as leverage goes, we aren't over levered. We have comfortable debt service coverage on EBITDA.
Okay, pleasure talking to you, Shekhar. All the best. Thanks so much for joining in, and all the best for the remainder of this fiscal as well. Well, Surbhi, we thought that pharma was the sector of the day. Pharma stocks were doing well, but suddenly they said, hey.
Cheers.
Cheers. It looks like it's cheers in the last half hour odd. I think something you have done.
I'd like to believe so, but no. Absolutely no Thursday drinks for me. We will take a very quick break on that note.